When you invest in a Golden Visa fund, you're essentially wiring a significant amount of capital abroad. The question a prudent investor asks is, where's my money actually go and who holds it? Today, we're going to compare how investment custody works in the US to the unique system in Portugal and why that matters for your due diligence. In the US, custody looks different depending on the type of investment. For most private investments, like in venture capital or private equity funds, there's no digital unit or stock certificate. The investment is documented on paper through subscription agreements, partnership agreements, and operating agreements. For public investments, like stocks or ETFs, your position is held digitally and reflected in your brokerage account. The value is tracked minute by minute, and the assets are held by a custodian on your behalf. Portugal operates on a different model. For all investments, whether public or private, digital units are created. Your fund units are created and registered with Interbolsa, Portugal's central securities depository. Think of Interbolsa as the official registrar of securities for the country. Once created, these fund units are sent to be held in custody on your behalf. There are two primary ways these fund units can be held. One is personal custody. In this model, you open a bank account in Portugal, often with a bank like Bison Bank, a process that can take 3 to 6 weeks. The fund units are then sent to be held directly in that account. This provides clear proof of ownership and a segregated account that is distinct from the fund manager's assets. Not all banks in Portugal are custodial banks, so you must use a custodial bank. The second way is omnibus custody. In this model, the fund manager opens an omnibus account and holds the fund units on behalf of many investors. This is often an efficient model for the fund, allowing it to bypass the need for each investor to open their own Portuguese bank account, which can save you significant time and hassle. For closed-end funds, or FCRs, these are called subscription units. For open-end funds, or UCITS, they are called participation units. Declarations of the creation of these units and that they are unencumbered, meaning they are free and clear of any liens or debt in Portugal, is one of the key requirements for your Golden Visa application. This brings us to a critical due diligence trade-off. While the omnibus model is convenient, it can come with a trade-off in transparency. You should always ask the fund to provide documents that clearly attribute your units to you, even if they are held in an omnibus account. Here's the bottom line. Ultimately, your choice of fund can dictate your custody path, and there's a trade-off between simplicity and direct control. Fees for custody can apply in both cases and can total over €15,000 over the life of a typical investment. Understanding your fund's custody model is also a key part of your exit strategy. The fund's structure and the liquidity of the underlying assets can impact your ability to get your money back, a risk we call a liquidity trap. I explore this in my video, How to Mitigate Golden Visa Liquidity Risk. For a full education on how to identify these risks and make a decision that protects your capital, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.